Evening. Just getting the briefing underway, and just as I start, just seeing both the DAX and the S&P centre of my charts just touching on fresh highs this morning. Looking at the charts though, cross asset, not too much going on. I guess the one thing that does stick out is this last little move higher that we've had in the euro currency. We've had a couple of CPI numbers come out this morning. I'd say nothing particularly out of line though. The Spanish CPI year on year 1.9% as expected. More, I guess, trade flow just going through the market and what otherwise has been fairly quiet from a fundamental perspective. And I guess looking at the euro currency in comparison to the last couple of sessions, we're fairly range bound at the moment. Not a great deal really going on there at this present point in time. Likewise, cable obviously was quite interesting yesterday because we got down to S1. We were talking about that early on in the morning on Monday as a key level, just given that it was also close proximity to the low that was seen immediately the morning after the hung parliament situation, that being at 126.38 in the futures. We kind of had another early look toward that level very early as Europe's come in, and we've taken an extended move here back up to pivot. We'll talk about the UK and the election in a bit more detail in just a moment. Otherwise, in terms of the equity markets in the US, I guess the one thing to be aware of is that from a calendar perspective, yesterday was by far the most quiet day from a scheduled release point of view. Certainly not a lot to get your teeth into. And I guess one of the main things that I did see though was that of quite a few of the newer traders, you were trading oil yesterday. Seemingly the other assets were pretty quiet, fairly news quiet day as well. And obviously oil being a fairly volatile instrument, regardless of whether there's news or not, you do tend to see a bit of movement. I would just be a little bit careful on a day when there's not a great deal going on and we're talking about the targeting of your kind of your strategy for the week, when you know that there's big events forthcoming today in the form of UK CPI. You've got the Fed on Wednesday, you've got the Bank of Japan, the Bank of England, US retail sales, all these types of events which inherently are going to provide probably more market movement as a catalyst, is to just have discipline. You know, trading is all about that. And I just felt yesterday some of you were getting a little bit into things that arguably weren't really there for the sake of, I think more so, just trying to counter some of the boredom. But this is one of the inherent truths of trading, certainly from an intraday perspective. So certainly today is going to be a little bit better in that regard. But I'd just say, you know, for the newer guys, just some patience is obviously key in those types of conditions. Looking at the US equity market, looking at what we had on Friday was that focus on the tech sector actually. There's a bit of, no one's actually been able to pin a true reason on why this is moving lower. Some suggestion though it's been a bit of a rotation, not out of equities overall, because hence we're still up at near record levels, but more, some say, a bit of repositioning and rotation into more defensive sectors out of what have been outperforming tech sector, which is more than double the size of the gain than the actual index itself. And so maybe a bit of strategy play now that this upside seems to just be getting more and more kind of limited at this point, having really just gone into a consolidation phase after several pushes on the upside. I guess what could really shake this market out of this more confined area that we've been in up here at the top, so I'm really kind of looking here, the Fed decision might well be a trigger. I'd say on the balance, most participants are expecting a dovish hike as probably the baseline scenario. that being the Fed pulled the trigger, another rate rise, second of this year. They remain on track in that regard. However, they continue to voice this kind of gradual, cautious type approach to subsequent hikes thereafter. But with equities looking a little bit firmer this morning, certainly Europe, the DAX and Eurostoxx have followed suit. So just seeing the T-note, the 10-year just edged down a little bit this morning, but again, still very much within its range of late. So unless we get down to S1 here on the daily pivots, then that could become quite interesting, that defining the low that we had on Friday of last week. What I'm going to do though is I'm just going to cover off a couple of news items that's happened overnight, and then I'm going to hand you over to Sam North to my left, and then he's going to jump on and talk about a couple of things from yesterday, maybe some trades that his guys were looking at, and then also a couple of setups and so forth that might be in focus in today's session. Just having a look then at the main headlines, and certainly the UK, or the fallout from the UK election, i.e. this situation of the pressure on Theresa May and the Conservative Party, continues to be really the dominant theme. This was one of the headlines that's being run this morning. This is Theresa May apologises to colleagues for the election disaster. Now this comes after she had a closed-door meeting with a group of backbenchers who meet on a weekly basis but can be obviously influential in a minority government, called the Conservatives 1922. And essentially she's come out fairly well, it would seem. On the back of those meetings, there was fears that she could have just been put under further pressure by some of those disappointed of losing their seats under her decision to call a snap election. But some of the wording that she is said to have used is that I got us into this mess, I'm going to get us out of it, it's my fault and I take responsibility, I'll stay as long as you want me to. And I think this was a fairly conciliatory tone. I think a lot of the Tories took that as a concession, because before she kind of failed to take responsibility for what had happened, and they feel a little bit happier, it seems, from what I'm reading this morning about her kind of just facing up to it. A lot of the source comments from last night that I was seeing on Twitter were suggesting that a lot of the Conservatives saying, where was this Theresa May in the campaign trail? The interesting thing here, and there's a couple of points to look at now as we go forward, two of Mrs May's ministers viewed as most likely to challenge her for the leadership, Boris Johnson, the Foreign Secretary, and David Davis, the Brexit Secretary, they've both called in that meeting on colleagues last night to back Theresa May. So if you were looking at any kind of leadership contest to try and take it away from Theresa May, certainly that has fallen away, or the probability of it has decreased. I do actually think this is probably a byproduct of maybe a couple of things. If you remember, after the EU referendum, Boris Johnson and Michael Gove and others couldn't keep their hands off a challenge on the leadership race. However, if you think about it in the context, the Conservatives are definitely politically on the back foot. Who would want to step into the fray at this point, knowing that you're probably going to lose, or at least going to have a tough time trying to perform in the role as the Prime Minister? And so I think a lot of this is probably very much a case of letting Theresa May continue to run the show, in a prospect that if it does fail, then she's the one whose head will roll, and so then you're waiting in the wings. Again, it's just the kind of way that politics works, I guess, even within its own internal party. Taking a look then at some other things as a timeline, Theresa May will meet with Arlene Foster, who's the leader of the Democratic Unionists Party, the DUP, at Downing Street today. That's going to happen. And this is to ensure a majority for the Queen's speech, which, as we heard yesterday, is going to be delayed back until the 19th, when she needs to have this agreement in place to then have a majority with those additional 10 seats from the DUP. A few other things, though. According to other reports, Theresa May is facing pressure in the cabinet to embrace a soft Brexit. Now, this is a lot of what's being spoken about. We were looking at Deutsche Bank report yesterday. They were saying actually it's a little bit early to be positioning for a soft Brexit just yet. Particularly just the main emphasis being that this is eating into much needed time to negotiate Brexit, and so it's creating political instability, which is a net negative in terms of the economy as well. But a soft Brexit is definitely something which has arisen, and there's quite a few murmurings on Downing Street of potentially moving that way. So Mrs May is being urged to extend Britain's stay in the EU's customs union, according to the FT this morning, and to abandon her election claim that no deal is better than a bad deal. The Prime Minister's spokesman has said that Mrs May's position on Brexit, though, had not changed. But certainly if you were to see a subtle change, the dropping of some of those phrasings like no deal is better than a bad deal is definitely something you'd be looking out for to indicate a moving toward a more softer stance. Two of the closer people now brought into the fold that would be more pro-Europe in that respect. The Chancellor, Philip Hammond, obviously his main focus is safeguarding the economy. And if you were safeguarding the economy, then certainly a soft Brexit would be more akin to achieving that objective. And then Ruth Davidson, who, if you remember that chart we looked at yesterday, of all the Tory members, it was only her that was seen favourably. All of the rest of the more senior and potential Theresa May replacements, she's the only one that the public perceive in a more positive light. However, she is probably the most less known out of all of them. She's basically the Scottish Conservative MP. So she's another one that has promised to forcefully make the case for an open Brexit. Don't forget, Scotland very much wanting to remain as part of the EU. On the flip side, though, this is the balance that Theresa May now has, is you've got Boris Johnson and Michael Gove, which were obviously a dual force in campaigning for Leave this time last year. But several Brexit options are said to be on the table according to the FT, and the other one I saw this morning was the Telegraph. We've gone a little bit further, and they've said that senior cabinet ministers are engaged in secret talks with Labour MPs to secure cross-party backing for a soft Brexit. Some of the most senior members of Theresa May's team have been discussing how to force the PM to make concessions on immigration, the customs union and the single market. This is kind of what I always thought Brexit would look like, in the fact that when we actually get down to the nitty-gritty of it, certainly the political landscape has changed, but I always thought that once negotiations got underway, it's us that would need to be making the considerable concessions. And I've always been of the belief that in the long run, this whole Brexit psychology will start to fall away, and you've already started to see some of that reflected in this latest election result. And what will essentially happen is, in the end, in however many years to come, we might have left Europe, but essentially we've got pretty much exactly the same deal as we had when we were in Europe. It's just a different name on the tin, so to speak. But we shall see. I mean, certainly any movement toward a softer Brexit would be, I guess, technically more positive for the pound in that regard. So continue to monitor that situation. In terms of what Europe have said, well, Michael Barnier, the EU's chief negotiator, pretty simple really, and it's pretty obvious negotiating tactic. He's just saying, come on, you're wasting time, you risk crashing out of the EU by March 2019, which is obviously the deadline for triggering Article 50. You need to get your game on, and you need to sort out your house and start talking to us. So nothing really too unsurprising from an EU's perspective, I would say. Otherwise, been pretty quiet, I'd say, from a news perspective. Obviously, you've got a couple things on the calendar of particular focus for today. So just having a quick look this morning is really centered around the latest inflation reading out of the UK. And if we look at UK inflation, it's been quite an interesting pattern, because what we're anticipating today is 2.7% is the median consensus. That would be then a repeat of what we had in April. So those that were potentially somewhat fearful that inflation was running away to the upside, which obviously puts the Bank of England in an extremely tricky spot of a politically uncertain environment where consumer spending is decreasing, with a lack of confidence putting pressure on household incomes, which is a net negative then for the economic performance of the UK. So what's actually expected to happen today is inflation again to level off. This was after a considerable jump that we had above expectations last month. Some of this might be the fact that after Theresa May called the snap election, of course, cable rallied quite aggressively. And actually it might be that some of the sterling strength that we had over that period, having traded around 130, might have helped negate some of this rise in prices that we had been seeing. So silver lining, so to speak. But this could be interesting. Obviously, one thing that last month had was it jumped considerably, but keep in mind this did encapsulate, of course, Easter. So it was the highest inflation rate since September 2013, mainly due to rising airfares, which is predominantly down to what they always do from a seasonal perspective, to hike prices around the time of Easter. Electricity prices also rose. Upside number, upside surprise, certainly. I think what you might get though is a move higher. Well, let me just move this over so you can see the numbers I'm looking at here. If you get, let's say, a 2.8, 2.9% reading, you would think, well, sterling should rally, because that should mean that ultimately rates need to rise. The one thing I'd say though, if inflation goes up to say 2.8, 2.9, yes, you might get an initial knee-jerk reaction higher in the pound as the first response, but actually what might be the move thereafter is the pound starts to decline. Because if prices continue to rise rapidly, and wages we know are pretty stagnant at this present point, that's only going to pressure the consumer even further, and for them to lose further confidence to spend. So actually, the higher the inflation figure, the more negative repercussion it has on the consumer and net the economy. See, what you might get is an actual move higher, only to then decrease thereafter. So keep an eye on that figure. Quite the opposite, obviously, if we drop back down to 2.5 or below, then certainly you might see that key technical level of the hung parliament low, yesterday's low, broken at that 126.38 in the futures. The other number, of course, for this morning is the German ZEW Economic Sentiment Index. I would say this is important historically because it's a forward-looking indicator, which is obviously key to assess economic conditions going forward. But it's been fairly steady. It was the highest reading since August 2015 previous. Not expecting too much from that other than to keep a fairly healthy number printing this time round. The one quite interesting thing here though is we're expecting obviously the Fed to hike tomorrow, and if anything the ECB, albeit relatively dovish on the press conference last week, they are on track to kind of start unwinding such a loose accommodative period of monetary policy. On the flip side though, economic conditions, you could argue, are more uncertain and weaker than they have been in a long time in the UK. If we get a further divergence between the three central banks' monetary policy, i.e. the Fed moving rates higher, the ECB starting to unwind their QE program or tapering against a fairly dovish Bank of England, obviously this is going to further drive cable lower, amid all the other reasons that we've talked about before as well. So from a policy perspective, that's why most banks still remain fairly bearish at this point on the prospects for the pound. Finally, North Korea, obviously continue to conduct various missile tests and so on and so forth. Who do you send to fix the job on the most savvy global negotiator that the US can pull out? Of course, Dennis Rodman. The ex-NBA star Dennis Rodman, he's been sent to North Korea to get the job done. He's meeting with the head of North Korea. He's very good friends with Kim Jong-un in Pyongyang. He's been sponsored by Potcoin, which is a marijuana-based cyber currency website, and he's going there to open dialogue. I joke, but actually he's probably done more for relations on that front than any politician from the Western democracy has probably done in a long time, so fair play to him. Okay, I'm going to hand you over to Sam, and I'll let him take over and he can talk to you about a few trade setups for today. Okay, thanks very much, guys. Have a good day.
Still running.
Yep.
Yep. Good luck to Dennis Rodman. He's going to need it. Having a look, well, at the markets yesterday. We'll start with pounders. It's coming to quite an interesting level. If I just move this across, yesterday it was around 127.08, where we had a bit of support in the morning. Well, late evening on the 9th, on that Thursday or Friday, sorry, and we broke through there yesterday. I'll just circle it up for you, and I think if we can get near there again, it's certainly a good area to consider. We came back. The classic was good once, and then found resistance there, and just above that pivot area. So getting short the pivot, I'd say, is a bit high risk, considering you're going to want your stop above that level. The market level I consider a bit more important here than that mathematical one. So considering, they are quite close together, 127.09 does look a good area. Below that, obviously, marking up the 126.38, which yet again with S1 yesterday was really important. So to the downside, that's the level I'd say to consider. But for now, considering where we're close to, that 127.09 on the futures, the most important level for the pound, and especially with the data coming out at 9:30. Not long until that comes out now, 35 minutes. So it could be a good day to get us through there, or we don't see that level for a while, and 126.38 comes into play. So those would be the key areas I'd say to look out for on the pound, and that really was the trade of the day yesterday for that currency pair, the classic, as that support level broke. Euro was a bit more tricky. You had that minutes price action where it went up to the high of the day and then back down to the low of the day very quickly. I'd say now, as we're just breaking above the pivot, we're coming to the top of this sort of mini range that we've been in. Above the R1 you have yesterday's high, which wasn't too far off the highs from Thursday as well. Looking at that with focus perhaps more going to be on later in the week, I'd prefer to sort of play the range, trade it a bit more technically, as was the case yesterday. You can see the high of the day did work to begin with, and the pivot held quite well. So I'd be looking, just above that R1 as a good area to perhaps short, or preferring perhaps maybe the pivot to go long. But for these kind of trades, I'd really let the market come to you rather than go chasing it. Also looking at oil, yesterday quite a few guys in the stage one, we had the competition day, but they shorted from R2 quite well on the first time that it came up, and you can see it did take a while to come down to what was the obvious target of R1, but did make its way down there. I'd still prefer the short. A good area to consider along with that R1 today is the yesterday's high. Although last few days the lows have been slowly getting higher, so you can see how important just that area above yesterday's high would be with the previous lows from last week, and obviously the data last Wednesday 3:30 really getting us to where we were coming into yesterday. So oil, given the time of the day, probably better to look to the afternoon for that. Again, you know, this short didn't really come into play until after midday yesterday, so I'd say up there again around that R1 looks quite good. Around where it is now, if it was come down to the pivot again, it'd be, if we just drop down the time frame, you can see it's already had a flirt with that pivot, so I wouldn't be too keen to go long on that. But with oil, always better to sort of wait for the afternoon to come there. With Wednesday and the Fed being the main focus, T notes very likely just to be its usual slow ranging self. I would, you know, if we look here just at a longer time frame, here you can see slowly sort of trending down. It's not a bad idea to maybe draw a little trend line on that just to see if it does align with any other technical points. It's not a bad area. R1 stop above yesterday's high. If we can get back up there again, a case of sort of waiting for it to come to you. The support levels from yesterday and the Friday, quite significant. If we can break through there, S2 doesn't seem a million miles away. So preferring the short if we can get a bit higher. You know, considering we are sort of trending down a bit. If we go on to gold, where's gold? Here it is. Yesterday's high was fantastic, and it was at a time where equities found their Friday evening lows. The yen was up at R1, I believe, and they all sort of turned on this point. So you can see here just how important the high of the day and the pivot area were. You know, a few of the guys in the stage 1 took that, and it made its way back down to the low. So again, I'd be preferring similar to gold if we can get a bit higher, just to continue this recent trend to the downside. I think with equities pushing higher, and just having a look here, euro just coming up to that R1 literally as we speak. So keep an eye on yesterday's high and that level. The yen, depending which way you look at it, dollar yen just pushing up as well, so a bit of dollar weakness perhaps with that pair. But yeah, gold preferring that to go higher, to look to short, as it looks like equities are starting to recover from yesterday's sell-off that we saw. And it was quite funny looking at Twitter at the time. There was quite a few people saying, oh, this is like August the 24th or 25th all over again, when the Chinese markets started selling off. It did look quite heavy. If we look at the Nasdaq and the Dow did come down quite strongly, but it's a bit of an over-exaggeration there. Still preferring the long in equities, but again, a case of sort of waiting for the afternoon and that really to sort of come to you. In terms of places to get in, S&P does look quite messy, to be honest, especially with yesterday's price action, where it was pretty hard to trade. Obviously you've got the mathematical levels, the pivots, which are always worth considering, and the main level. So what I always do is come in the morning and assess, is there any market levels, so i.e. this one here from the 9th that mark up with one of the pivot levels. So that would be an area I consider. I don't think we will get there, so looking to perhaps use the pivot and yesterday's lows as other levels to consider. Again, going to be the same sort of process for the Dow and the Nasdaq as well. But despite the sort of sell-off we were seeing in the morning into the early afternoon, equities looking to sort of bounce back, and the DAX as well. Got R1 in sight here. Quite an important range if you were to draw it up over the last 1, 2, 3, 4, 6 trading days. The high from Friday and the low from the 7th containing that. Prefer to long from lower down than short from higher up. Still looking to long equities, but in terms of place, I think the pivot's still not too bad. You've got quite good resistance around that area from last night. We did break through yesterday, early this morning, So I think pivot could be a good area to look for if we don't break through R1. Just having a look back at the euro, just holding up here around that R1 level, but with yesterday's high, looks like a good area definitely to take a bit of profit. With the data coming out, 28 minutes though for the pound at 127.09, and the low of the post-snap election, the main ones to consider. To the upside, if we can obviously break 127.09, the main area to consider R1 and then yesterday's high, and that would obviously be quite positive considering what's going on. But 127.09 for now, the main sort of one to be aware of there. Any questions about any of the charts, do put them in the chat. I'll be under Vass's name on Trading Live today, well this morning anyway, so do feel free to let me know. But for now, market's just slowing down with that euro. Any questions, do let me know.